What's up, everybody? It's Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, we're going to talk about what's in the news today about the medical debt. Biden's uh, wants to propose a bill that will take away medical debt off of credit reports completely. Now, there was a $500 rule that was in place, but after reviewing what was happening, they decided to up their game on this. Now, me personally, I think that this is a good thing. I do not think that someone having medical debt on their credit reports should stop them from being able to move forward to be able to qualify for a mortgage, to be able to qualify to get lower rates so they can start to pay down that medical debt. And I don't think if you're thinking that this is some type of proposal that's going to try to get people to run away from debt, no, it's not that. It's just to be able to allow people to be able to get into the position to move forward. And talking about medical, look at me. I we have this trash can, one of the big green trash cans from Waste Management, and it has a lock on it. And I don't know. I unlocked it and the bar slammed down on my wrist and it like sliced it down the middle. And I noticed that in my office, we don't have a medical bag, or maybe I don't know where it's at. I'm here before the employees get here. It's probably somewhere and I just don't know. I've always asked someone to get it and they provide it if I accidentally cut myself or something. And in my car, if you have a Mercedes Benz, which I do, it always has a medical kit in there. Always. I've never had to use them. And I think what I did in my car is that I gave it to my wife to have in her Jeep. And but today is that day that I needed that medical kit. So this is my Band-Aid right now. And it's like a slit on my hand there. So we're going to talk about the medical debt. We're going to talk about what the exact proposal is, and it's being initiated through the CFPB, Consumer Financial Protection Bureau. Um, but before I even get into that, I want to talk about a few things that I need to make you aware of because I, I I used to do this a lot in my videos when I first started, and I think I need to go back to doing it because uh, people get into trouble with their money, with their credit, because of there's two things that I see that are prevalent, and what the inspiration for this came from an employee that works for one of my businesses that was talking about their rate for their healthcare insurance, and that that they were thinking of working a part-time job, uh, thinking of working a part-time job to pay for their insurance. Now, for that particular company, we don't provide insurance, but I do, uh, uh, you know, refer them to a company that to a place that we have the employees be able to get the insurance at a very reasonable rate. As a matter of fact, when I look at it, the rate is cheaper than if I was to provide the insurance. So that's why we've always done it that way. And it's straight up regular insurance, not any type of cheap type insurance. As a matter of fact, my daughter and son-in-law, they go through that policy and they got 4 kids. And trust me, if it wasn't affordable, they would tell me. Uh, and but what made me think about it, and you might be thinking about this, well, maybe you're not paying them enough for the insurance. And well, for this individual, they're getting paid over $85,000 a year, over $85,000 a year for their uh, pay. And so this this what I'm about to say might offend some of the people that are watching, but this is what has to be said. And as a matter of fact, this is what had to be said to me. The realization had to come to me for me to be able to move forward in my life when I started having issues in the 1990s with my debt, is that you cannot spin your way out of money problems. No matter what amount of money you make, you can make uh, $10,000 a month. You can make $10,000 a week. You can make $10,000 a day. I've seen people at all of those levels, including myself, that no matter what amount of money you make, it will be spent. So, what you have to do, especially, and it's so easy, you may think that this is crazy, but it is a lot easier to get into the habit of spending less when you don't make a lot of money. But people do it the opposite. People will spend a lot more money than they have when they make less money. But it is easier to downsize your life when you make less money and know exactly what you have. So when you move up into making more money, you know that you do not need to spend that money. Like, you need to put aside a certain amount of money, and that's the money you can spend. This is the money you save. This is the money that you take care of your household expenses with. Like, that's what you got to do. And it's a lot easier to do that when you have less money. Now, I admit, which was my situation in 1994, is that I had a good income from my business that allowed me to be able to reset. But even though I was allowed to reset, I still had $300,000 worth of debt over my head. And it took 5 years to work all of that through, with doing, giving stuff back, settling debt, uh, getting sued, all of that stuff. It took 5 years to work my way out of that. But the thing that my wife and I did do, hear me clearly. Wake up if you're going back and forth or you're thinking about clicking on, because this is what's going to change your life when you hear stuff like this. Is that what me and my wife did? Is that we just said, number one, we knew what amount of money we had, and we knew what amount of money we were going to be able to spend. We knew what amount of money we had to pay our debt with. We knew what amount of money we had to pay our expenses with, because some people don't think of their expenses to be like electric, insurance, gas bill, light bill, that type of stuff. Uh, all of that needs to be thrown in there, because that's where people start to go over. And what we did is we just said we're not going to spend no additional money without, number one, without notifying each other, and then we just going to agree on what we're going to spend money on from week to week. And we've held to that even to this day. Even though I make way more money than we made back then, my wife and I still, to this day, we just give ourselves a weekly pay, and then the rest is savings. That's just the way we do it. Because if you don't do it that way, what you will end up doing is you will end up spending more money on stuff. You end up getting more credit. You will be like these sports players. I was listening to Chad Ochocinco and Shannon Sharp, and they said that 89% of ball players in all sports, all the way around, no matter how much money they make, 89% of them are broke within 2 years. It used to be 5 years, in 2 years now. And that's because the spending of the money, you can't spend your way out of it. And then when you make bad investments, like what a lot of them do, which I don't even know why a sports player, when I talk with sports players about what they should invest in, almost all of them, I say nothing. If you have a $40 million contract and you chop away your taxes, you chop away what you got to pay your agent, You chop away, and this is how you'll know that I work with sports players. You chop away what you pay your mom, your dad, and the people that you believe that were close to you. The rest you have to start saying no to. That's just the way it is. That I don't even know if it goes that way in all communities. I know in the African American community, we take care of our mom and dad. Period. I mean, my father has passed away, uh, and I my mom is like on my payroll, and I don't even take a deduction. I just say send her a check every week. Every week. That's just what I do. That's just what I do. So I understand when a ball player says, "Well, I got to take care of my mom. I got to take care of my father or my uncle who was like a father to me." That's just the way it is. So that when you know you have that, then you have to you have to have that as an expense. And the only way that you can know if you can continue doing that is to know how much money you have. And the first person you have to take care of, which a lot of people get mixed around, especially when you start to make a lot of money, is that you feel obligated to those people. You feel obligated to those people. And I can tell you, my mom does not make me feel that I'm obligated to do it. I want to do it. Like if I was to say that I felt obligated, she would say stop. She would just say stop doing it. And um, but a lot of people feel that they're obligated to do it. You should not feel obligated to do it because it like I've said before to other people in the same situation. I said, if you were to be gone, what are they going to do? So that means that no matter what, that person has to be able to maintain themselves without you. And the same thing for yourself. When you take yourself away from your income, when you take yourself away from what you do, you need to be able to maintain yourself. Now, when it comes to you that are working a regular job, you still have to lead your life the same way. You may not be taking care of your parents or someone like that. You might have loaned them money, and you probably need to stop doing that. You need to make sure that you take care of your household fully. Your household, before you loan anybody any money, you make sure your household is fully. And when I say full, I mean that you have savings, you have emergency money, you started on your retirement. You don't spend more than what you make on a weekly, bi-weekly, or monthly basis. All of that needs to be in order before you loan anybody in your family any money. Other than that, you're just gonna have to tell them no. And trust me, the first time you tell them no, they'll stop coming at you, or maybe they'll come another time and then they'll stop. This is what a problem when people start to make a lot of money is that they forget this stuff, and then all of a sudden they making more money and they have more problems. So you can't spend your way out of it. So you can't go out and make more money to fix bad problems. You're just going to have more money, more headaches of working more with more problems because you're spending. The spending is the problem, not you working, not the money that you're bringing in. Now, I'm not saying that if you have low income that you're not going to have to change that. But what I'm saying is that that's going to be, if you fix it when you have low money, you fix it now when you have good money. When you make more money, you will have more money because people get into that habit of spending more when they make more. The next thing is you got to watch out for being subconsciously making decisions. What I mean by that is you could be making a bad financial decision because you're so used to making bad financial decisions, and you feel comfortable making that same bad decision because you've always made that type of decision. Let me give you an example. There was a, a YouTuber had a question for me, and they said, "Okay, uh, I just like to have this money come out of my check because I don't have to worry about it." And I said that's okay, But do you know that you were about to make a bad decision based off of just one reason? Based off of just one reason, you're used to having it come out of your check where you don't have to worry about doing it, that you were about to make a bad decision just based off of what you were used to doing rather than based off of making the best decision for you and your family. So let me give you some examples of things that you can do to break your subconscious decision making cycle. Some of them may seem so simple, but I'm telling you, your superstition might get in the way of it. First, when it comes to making money, when it comes to making money, depending on your personality, depend on your specific situation. When people, if you've ever heard of Murphy's Law before, where they say, something bad has to happen when something good happens. Well, let me tell you that is such a subconscious. Uh, I don't know who came up with it, but it does not exist. Just because good things happen to you in a row does not mean that bad things have to happen to you. I used to have that thought process with my business. Early in my business, when I first started getting success, we would have good week, good week, good week. And subconsciously, I was thinking it can't just always be good. And then all of a sudden, I would get what I asked for. It can be good all the time. And then whatever happens, happens. It can be good all the time. So what you have to do, these are some of the things that you could do is, and I do this stuff on a daily basis, coming into my office to wake myself up from being automatic. One of the things that I'll do is I will exit my desk going one direction and I'll exit my desk going another direction. That little simple thing, and let me tell you uh what I started to notice is when I would come back into my office and I would see my chair one direction or another direction, and I did not remember which direction I came from. That right there is simply alerting your subconscious that something that changed, because you could get into the routine of doing the same thing over and over and over again. How about not looking at your cell phone when you wake up in the morning? Just don't look at it. Or you don't do the same routine when you look at it. These are simple things. Those are things that may not matter when you look at it for credit and debt. But what it will matter is that it's going to train your mind to wake up all the way, to not be so automatic. Because when you're on automatic, it could make you be in line at the cash register paying, and the person says, do you want to get a discount of half on your order that you're about to do if you fill out an application for this department store credit card? And because you're in the mode subconsciously of always wanting to save money, always wanting to not have to pay for something right now, I can pay for it later, but you forgot that you're in Steve's program or some other program to pay down your debt and to get your expenses under control, that you could subconsciously make the same decision that got you into the trouble that you're into right now. Maybe you're at a car dealership and you are about to buy a car, and the dealer comes in there and they say, well, here go the payments. You know how they'll do those four squares, and they'll be like, what payment you want? And you just go for the lowest payment, and you don't even understand the terms, because they, in your own subconscious conscious mind, is seeking to save money over understanding what you're getting into. These are like slight things, and you're so used to doing that. I was so used to doing that. Sometimes the lowest payment is not the best deal. You need to get the best deal and the lowest payment. Think about it this way: if you had the lowest interest rate, you get the lowest payment and the best deal. But you could get the lowest payment and the highest interest rate and the worst deal. It's all about the way that you're looking at the situation, and the way that you look at the situation is not really by what's on the paper, it's by what's already in your subconscious mind on what you're used to looking for. The subconscious, the automatic, the way that you've always looked at it is the way that you're going to always see it. So you have to do things to break that cycle of that thought pattern so you can know maybe I'm gonna have to get up and get out of off of this deal because it's not the right deal. Yeah, you gave me the payment that I wanted, but that's not the right deal for me. And you just get up and go. Or maybe you want to make a big purchase on something, like you want to go get that dream car, but you look at your situation, you say, well, should it what where would the money be more wisely spent? On buying a new car, buying a new car and having those monthly payments, or just keeping my car that I have in shape to get me around and put that money more into what I need for my goals on what I want. Maybe I want to start a business. Maybe I want to just be able to invest more to make more money. Where is that? Because if you were to come to my office and see me, I'm gonna take a quick drink. You would be like, Steve, your Mercedes is a nice car, but then when I told you that that car is a 2008, that how many years I've had that 2008 car, and when I look back at all of the payments that I haven't had to make because I kept that car so long, because I kept it so long that where I was able to utilize that money to put it into other stuff, it's just a change of thinking. It's just, I like nice cars. Trust me, I like nice cars. But I have a change of mindset on what I want to utilize the money for. Maybe that money is utilized for to bring on an employee that can double my business or triple my business. It's all about the way that you're thinking. And don't get me wrong, I'm not talking about not going out there and getting the things that you want. What I'm talking about is to do it the right way, to make sure that you're getting yourself in the position of the right deal when you take a deal and not to do things subconsciously. So now the next thing is I get a lot of text on here. Crazy. Um, the next thing. So now let's get into the medical debt from the proposal that the Biden administration is putting forth. So the what I'm reading here, and this is straight from the CFPB's website. It says removal of all medical bills from consumers' credit reports. This is all medical bills, no matter how much it is, all medical bills. And then they want to prohibit from including medical data and collection information on consumers' reports that creditors use in making underwriting decisions. So consumer reporting companies would be prohibited from including medical debt and collection information on consumer credit reports that creditors use in making underwriting decisions. Okay, so they this is kind of confusing, but I guess any type of medical debt, or they talking about all collections. Either which way would be okay. Either which way would be okay. But the big part of it is that they used to have a $500 rule. Now they're talking about just all medical debt, period. And the big benefit for this is that it's going to allow people to be able to qualify. So, say for instance, they want to get a debt consolidation loan to pay down their medical debt and all their other debt. They could get that, pay a payment to that, and then and when you do a debt consolidation loan, don't go out there and charge up the credit cards and all that stuff again. No, you get that loan so you can pay one place, and then from paying that one place, you budget, and then you start paying that one place more and more and more to pay that down. Uh, Also, another huge benefit is that if they're going to take that off of people's credit reports and let that credit score go up, it's going to allow people to be able to get into a house, allow people to be able to get a car, allow people to be able to get things that they need to be able to build wealth for themselves and their family at a lower interest rate. That's what this is all about with that too, or the huge benefit that that's going to bring with that. And then it says to stop creditors from relying on medical bills for underwriting decisions. The proposal would narrow the 2005 exception and prohibit creditors from using medical collection information when evaluating borrowers' credit application. Now, um, that could end up being, uh, I would say that that's not necessarily something that they're going to be able to do. You could be approved on, well, they could do that. They could do that and make that not part of the decision for getting you approved. But if you've ever purchased a home before, you're not going to get approved if your debt to income ratio is over a certain dollar amount. Usually is about 45%. You cannot 45 to 55%, depending on what lender you go to. They want you to not be spending on all of your debt 45 to 55% of your income. Reason why is because they don't want to get you in there and then you end up having losing your home, because they know that you get that home, what's going to be the next thing? Got to get more furniture. What's going to be the next thing? It, maybe some improvements that you want to do, some upgrades that you want. If it's a new house, then some upgrades that you might want. Like I know at my house, the one that I had recently sold, we had a whole back concrete deck put in there. We had a swimming pool put in there, heated swimming pool, had concrete instead of the black top for the driveway, had the fencing put around. It was that solid white plastic type fencing. All of that stuff was a lot of money. We had the basement totally, uh, uh, redone with, weight room, two weight rooms, two exercise rooms, one middle room that was an office that became a playroom, and then a theater room that was towards the front when you came down the stairs of the basement. Uh, so they know that people that we're gonna all do that. So they're like, hey, we got to get some cushion on there, and then you're gonna just be spending money on just your stuff, shopping and all of that. So they try to put that have that cushion in there. So no matter what they do with this, it may not stop them from approving you with your underwriting, with being able to get approved for a loan, but you're not going to get approved if your debt to income ratio is more. And what they're going to probably require people to do is to have some type of payment arrangement set up, and then they want to make sure that payment arrangement is going to be within that guideline of the amount that you can be over or under to be able to qualify on debt to income. The next one was stop coercive collection practices. As unpaid medical bills would no longer appear on the consumer credit reports uh, by creditors making underwriting decisions, debt collectors would no longer be able to use the credit reporting system as leverage to pressure consumers into questionable debts. I don't into paying questionable debts. Again, that's all going to be part in the education of understanding what would be a questionable debt. Well, questionable debt is when you get a medical bill. Number one, if you get a medical bill from a debt collector, you should always question to make them show you the privacy to make sure that nothing was disclosed. And it could be an illegal HIPAA violation disclosure if they have the procedure in the name of the service that was provided to you. They have no right to be able to see that. When we've questioned this with debt collectors, they would always just send it back to the medical provider like, hey, we don't want to have nothing to do with this. And they would take it off the credit reports themselves. They would be like, we don't want to have nothing to do with this because we had that gastric uh, services incorporated or LLC. It's like you cannot disclose the type of service, medical service that someone was provided to an unauthorized third party. So, but what debt collectors will do, what they will do to make sure that they are able to, to utilize their services, that they will just start to take people to court, which they will still have the right to do that over medical debt. And um, you should always challenge to see if the debt collector purchased the debt or they're collecting it for the medical provider. And then also with the HIPAA violation, you should also go through that. You need to make sure that there's not any surprise billing in there. You need to make sure that the insurance wasn't supposed to pay it and there was some mix up. All of these types of things that you need, these checks that you need to go through, regardless if they had it on your credit report or not, there's a process that you should always uh, put medical collections through to make sure that number one, the bill is accurate, number two, privacy, number three, insurance didn't pay it, number four, that it's not a violation of the No Surprise Act. Like if people just knew all of those things, they wouldn't even have to worry about it with the credit reporting agencies, because a lot of those things that I just named are violations that they usually have. All right, so I'm going to end it here. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, so you can see my 8-point validation process, my two-phase settlement process. And if you need your credit report scores, go to the website your3scores.com to grab your TransUnion, Equifax, Experian credit reports and all three scores. If you have debt collectors coming after you, grab my 3-pack of letters, statute of limitations letter for debt that has passed the legal statute of limitations to collect, debt validation letter, and cease and desist collection activity letter. I do ask for a donation on those, but those letters can literally save you time, money, and a lot of frustration. Thank you for your time. Please subscribe to the channel, post your questions and comments. This is Stephen A. Williams, president and founder of thecreditrepairshop.com.